Hey guys, welcome back to another episode of Market Mastery. You're with your host, Trader Dax. Thanks a lot for tuning in. And I just wanted to take you through some interesting things happening in the market at the moment. Bitcoin is breaking to the downside of its rising wedge support. Now, there was always a chance this was going to break through to the upside. And continue on up and test this level here, 28 or really 29K, and possibly go to the top of this range here, which is about 32. So that was always a chance that that could have played out to the upside, but it seems to be that we're getting confirmation of a breakdown here. Now, we still have this daily order block. This is the red box through here that acted as resistance through here, and then now it has flipped to support for almost a month now, right? So it's been pretty strong support through here. I don't know if it's going to be able to hold up through here. We could see price get a little bounce out of here and come back up and even retest maybe the 200 weekly MA, and that could flip into resistance. So there's a lot of support and resistance in this area here that we need to keep our eyes on. And there could be some really nice trading setups off this. For example, if we break below and then come back above here, I think that is a pretty nice situation to get back into a trade, especially if we get back into the rising wedge. So if price comes back above this area here and does something like that, I think that's a pretty good indication we're going to be continuing on back to the upside. Now, if we just lose this level here, this daily order block, right, and it tries to get back above and gets rejected, right, and starting to roll over, like we get a big wick to the upside or something like that. A candle that looks like this one here, right? If we get a candle that looks like this one here, right, with a big wick sticking up out the top of this order block, or maybe the wick goes into the 200 weekly, and then we get a red candle off that. Those are those sort of nice entry candles that you can take to get into an entry. Something sort of similar to this, wick into the order block, and then we close back below like we did here on the 4 hour while it's giving bearish divergences or, overbought, right? At the moment, though, something I wanted to bring your attention to is since we bottomed 18th of June at around 18K, every single time the RSI, right, this is the relative strength index, every time that has come down to the oversold regions, right, which is under 30 on the index, right, every time we've come down to around that 30 level in the oversold area, it has been the bottom of that pullback, right? So pretty interesting to see if that's going to play out here. If this starts to, try to bounce and just gets like a real weak little bounce and then rolls over and this starts to go much deeper, then that can tell us that whatever this bullish activity was back through here, because the RSI only bounces off oversold when the market is bullish, right? If this starts going deep in the oversold territory, then it's telling us that there's very strong chance this is flipped back to being bearish, and we're going to need to wait for a daily oversold sort of full swing low on the daily and a daily setup for this to bounce again. So if that does happen, right, we had a daily sell top indicators kicking in back here when we had the shooting star set up on this candle. Just zoom in a little bit for you guys. With the shooting star set up on this candle, it SFP'd, and then we got the confirmation. Well, not really confirmation of a shooting star, but it's starting to form that shape. And then we got another fake out on this candle here as well with another SFP, sort of similar to how it played out the previous top through here and almost through this one, but we didn't have the extra SFP through there. So it's been pretty nasty price action with a lot of fake breakouts. Multiple times this looked like it was just going to continue on running, but the sellers got back in control before the daily close kicked in, and we've been going straight down for 6 days in a row now. Let's see how we end up closing tomorrow. This is going to be quite an important close, in my opinion. So bears want to see a strong red candle closing below this daily order block. Bulls want to see maybe a wick in here or even below, and then this closes up here like this as a nice green candle, right? So hopefully that makes sense. Looking for, some sort of candle like this, or like this one here with a wick to the downside and small body close, or, a strong body close back in here. But I doubt that would happen. If it did, we'd probably get, we'd be more likely to get a candle like something like this, right? Try and make this about the same shape as possible. Hang on. Right, and then a big wick to the downside. So something like that comes into this into this order block, right? And then on the 4 hour, we're sort of hitting that day that oversold regions again, and then bouncing back out of there with a lot of strength and a lot of intent from the larger players in the market that this is a dip that they want to buy. Now, probably more important than what happens in the Bitcoin market is what happens in the stock market. This definitely, just plain and simple, if you're looking at the technicals, this is very bearish at the moment and just looks like a rising wedge. Now, it has looked like that for some time, but these big patterns like this, sometimes I have a bit of a knack for continuing on to play out to the downside and not faking out. But if it does, we definitely want to be getting back into the market, I think, back above this 200 weekly, because that will probably carry on, be a really nice fake out. Everyone will get trapped underneath, this order block again, underneath the 200 weekly, calling again, or, 10K, 14K, etc., and stuff like that. There'll be a lot of panic sellers, I think, underneath this daily order block, definitely underneath these highs and coming back into this 20K area. It'll be a really nice spot for the larger players, whales, etc., funds to fill their bags and then push the market back on up again. Now, more importantly than the technicals, which are obviously very bearish at the moment till proven otherwise, is what's happening in the stock market, right? Just a quick look here at the Nasdaq. This is something that Roman pointed out to me on the Nasdaq specifically. We had been looking at similar sort of setup with the 0.618 on the SPX. I'll show you that one here, right? So this is the S&P 500. I was saying to some of the guys in one of the streams the other day that we're coming up really close to the 0.618 area, and also this outside trend line here as well, right? Which is a very important one. We broke this one back through here, and the price has been nothing but bullish ever since, right? Once we broke out from that. So that was pretty much, a really nice rising wedge play, and it broke out to the upside. Now we're coming into, the larger downtrend resistance line, and it's going to be a bit of a tough one to get through, in my opinion, and price tagged it perfectly and has been rejecting ever since, right? And that, in combination with coming into the 0.618 area, is always going to be a tough spot in the market going up and down. So there was always going to be a possibility that this area through here could be a potential top of a bear market rally, if that is a bear market rally, right? The thing is, this bear market rally has lasted since pretty much the 16th of June, right? That is a solid 63 days, right? And you have to sort of ask yourself, at what point does that stop being a bear market rally and become the beginning of a new bull run, right? I would actually like and prefer this to roll over one more time and come quite deep, even make new lows, and then rally later on in the year. I think that'd probably be healthier for the market in general. I sort of feel like this has been a bit of a premature run. The Fed is still so early. I mean, we only just started QT. So QT started at the start of June. So 17 days into QT starting, we're going to bottom in the stock market for the next 10, 15 years. I don't know. That just seems a little bit crazy, but markets are forward looking. We do know that. The only question is, how forward looking exactly are they? And things to watch out for in the stock market coming up in the next couple of months. Definitely one of the main things to watch for is earnings reports from large companies. Are they starting to feel the squeeze? Just chatting to, different friends over in the US and stuff like that. And just talking to them about their spending habits, their work spending habits and things like that, and people starting to feel the squeeze. And everyone's starting to feel the squeeze in the US, that is for sure. From at home, businesses are starting to see starting to see things need to tighten up. Now, does that translate across into earnings, right? And will we see the earnings come down in shock to the downside over the next couple of quarters? That could cause a continued and prolonged bear market if we start to get earnings reports shock to the downside. Now, that may not happen, especially with with the new inflation escape plan that they have at the moment to print, they printed an extra, I don't know, almost $1 trillion or something. I can't remember how much it was, like 800 billion or something. So let's see how that ends up playing out. But I think the most healthy thing would be a bit of a pullback here, fake out to the downside, and then we break out and push from there. Is probably one of the better things. I don't want to see this just push all the way back up to here, because I feel like that would be too quick. But the stock market does have a bit of a habit of, once it is back into a bull run, because let's be honest, the bigger funds and the wealthier people of the world decide it's time to start buying, it just doesn't look back. Now, we're looking obviously at the 2020 COVID dump, obviously much different situation here. The federal government and the Federal Reserve was pumping capital into all markets back then, whereas now they're taking it out of it. So yeah, a bit of a weird one here at the moment, this rally, and it's definitely a hated rally from traders and a lot of funds, that is for sure. So let's see how this plays out. But I think a really important level is this level through here, the downtrend line that we're watching at the moment, and the 0.618. If we get acceptance above this downtrend line and acceptance above the 0.618, right, it's going to be very hard to argue that this isn't the start of a new bull run, because at the moment I think we're only 12% or something like that. It got all the way to 10% from previous all-time highs, right? So we're back in definitely the regions of this becoming a new bull run, and it might push all the way up to here and then do some sideways chopping action for a while and then run again from there. We've seen similar sort of action to that before as well. So I think the main thing to watch here is this big downtrend line and the 0.618 fib, right? And if we do start to trade above there, you sort of have to think and start to be acting and playing this like it is the beginning of a new bull market that could last for a long time. The thing to watch here on the Nasdaq is on the previous downtrend, right? We'll just highlight that one through here, right? We can see that price, if you take it from here or this week here, it doesn't really make that much of a difference. Price came back up to the 0.618, right? And then it rolled over. Now, just removing all the price action history from this side of the chart, right? We came up, tagged the 0.618, and then rolled over from there. Now, from the top of this run here, right, we come all the way back down here. We're done exactly the same thing, right? Come up, tag the 0.618, and right at that level, we've put in a topping pattern known as the shooting star reversal. So really interesting at the moment, because this is obviously a key support and resistance level through here as well from this swing high, right? How this ends up playing out. Now, if it continues to just grind up like it has been, this is probably just going to chop a little bit more sideways and then continue to push. Now, breaking back above this level here and back above this 0.618 will be pretty telling, I think, because if this is just a bear market rally, it's probably going to roll over and have quite a deep retrace here. And if it's the beginning of a new bull market, it's probably going to push straight through. Now, the other thing to watch out for is through here, right? If we take from all-time high to the lows, we have that range. So up here at 14,587 would be the 0.618. So that's the other level that I think is probably pretty important to watch for. So that's from the high, all-time high, down to the low in middle of June. So that's another key level to watch for. If this starts trading like this above this previous highs, I think if it gets above this high, it's really going to be difficult to say that, okay, this is just a bear market rally. It's what's going to do, go to a new all-time high and then dump back to the lows. I think very unlikely. All right, because as soon as the narrative switches that this is back into a bull market and everybody's just, all the big hedge funds go, okay, we've missed the bottom. They're going to start piling in. The rest of retail is going to start piling. It's going to push higher every single time it has a little bit of a small pullback. It's going to just get bought straight back up. The same thing it was doing the whole way through this COVID run, right? So we might see similar sort of price action to this, right? That's what I was sort of saying. Like we get a bit of a climax, sideways chop, that's really just a bull flag, right? And then it breaks again to the upside. So something like that, because at the moment we've just had one sort of push high, right? Can we get a bit of a sideways chop for a month or two and then push again? I think that would also be very telling that we're back into a bull market, because if it chops again sideways like this, and we're going back and it's a bear market rally, then this should be distribution and it's getting ready to roll over again, right? Usually the bear market rally, like we look at this one here, at the top of it was very quick and then it rolled over and it was just all pain, right? So I think if we flag, it's more likely to be bullish, right? If we do have a sharp pullback, right, it has to have a sharp recovery. I don't think we're going to have, a pullback and then it goes sideways for a little bit and then it just takes off. I think that's unlikely. So those are probably the main things to watch out for at the moment. Definitely continue to keep your eye on the DXY. Apart from, the rest of the world's currencies, are still being inflated in most places. So the dollar is getting extremely strong. So this is hard to watch and be like, okay, when the DXY goes up, stock market and Bitcoin are going to go down, because they can definitely easily both go up at the same time, especially at the moment. If, as the euro is crashing, because, everything is really bad over there because of the war, right? With the euro crashing, the UK pound crashing as well. They've got 10% inflation. There's a lot of confidence going out of the euro and the pound, and that's all going into the dollar. Same with the Japanese yen. It's all going into the dollar. So it's pushing the dollar higher. It's not necessarily coming out of the stock market into dollars. So keep that in mind. The other thing, though, to watch for strength for is the bond market. So 5-year bonds, 10-year bonds, 2-year bonds are definitely important to watch for. This is typically bullish price action because we've had a potential topping action here with the head and shoulders, and then we've swept the low there, probably caught a lot of traders off guard, and then come straight back above that sort of key level through here, that neckline, and it looks like it wants to keep trending higher. Now, let's see how that ends up playing out. So that would be playing out to the upside with bond traders continuing to think that the Fed actually hasn't finished taking the demand out of the market and we need to continue raising rates, right? So keep your eyes on this level through here, because if this ends up rolling over and we drop that level through here, it's probably a really good sign that, inflation's starting to come down. The narrative is sort of shifting onto, the Fed pausing sooner, lowering rates sooner, and, the bond traders are going to be, selling off bonds, and this is going to be going lower. And, the market in general is going to be pushing much higher if this comes back down through here, right? Because that'll be good signs that rates are going to go lower, right? So we're watching for this sort of price action, a roll over here on all these markets, right? As you can see, the 2-year bonds are looking really strong here. Like this wants to push and break out of this level, right? So if this is resistance here, possible little top here with that SFP there on, the downtrend of the bull flag. I think probably the downside level here to watch is from this previous high back here at 2.78, right? Watch that level through there. If that breaks the downside and we start trading below here, I'd say probably strong chance we are back in a bull market, right? Other thing to take note of as well is keep your eye on the oil price. So oil is obviously been dropping. It's down to $90 a barrel. So the other thing to take note of as well is China has had a lot of lockdowns again recently, which obviously is going to reduce the price of oil, right? we've sort of come back down to this key level here, right? Previous highs back in October 21. All right. Let's see, what happens when China completely opens back up, because not only will that start to use a lot more oil, which could push up the price of things, but at the same time, it's slightly counterintuitive that, obviously China coming back online is going to reintroduce more supply to things, which will help stem inflation, which means that the Fed is actually going to be able to stop raising rates faster as well. So keep our eyes on oil for sure. We just don't want to see this coming back over that 95 level, because that could, give indication this is going to push higher back to 120 or something like that. But I think, the general commodities inflation is probably I think it's probably over for now, unless, something drastic changes in the world, like China invades Taiwan. That can all change very, very quickly. But for the moment, I think, that danger is probably averted. And this is going to just continue grinding down for some time until it gets back probably to around the $65 level, right? So that's one thing to keep your eye on, right? To see where this starts trading, because, obviously the lower oil goes, the less inflation, the faster the Fed can start stopping its rate hikes. So that's pretty much it for the general economy, bonds and everything like that, DXY, et cetera, et cetera. All right, I like to keep my eye on the GBTC chart. So, we had obviously the break of the downtrend through here. The rising wedge trend line. There is this other sort of trend support, the wider trend through there that maybe, but I think probably the main one to focus on is this one here, right? And it's sort of coming to the bottom of, that same daily order block, right? That's through here, right? So, that's starting to, if we get a close below that, who knows how deep this is going to go. But that's always one I like to watch, because it has been a fair bit more bearish than the actual BTC price action. Because you can see here, we didn't get back above this level here. So this has actually made a lower high at the top of the wedge action through there. So that's a little bit more bearish as well. That's one to keep our eyes on. But from here, I think if we've dropped this level, the next level is 13, and then, we're looking for, previous lows or something like that. But I mean, the perfect BTC setup, and the trade that we sort of usually get for bottoms is something like this, come down and sweep a low. So something like this, right? That's usually the type of bottom that we get. I mean, not just specifically on GBTC, but crypto bottoms in general. When the market actually does reverse into being bullish again, it likes to take out lows. You can see took out lows here, took out lows here. When the market's getting ready to roll over again, it usually doesn't take out that low. You can see here, 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 all these lows are actually higher lows, not lower lows, right? So it usually goes in the other direction first. So I would like to see, to give me confidence this is going to be a long-term higher time frame reversal, I'd love to see GBTC and also Bitcoin chart take out the 17.5K low. Like that would be an amazing, some sort of setup like this, come back down through here, reclaim, and then take off from there. Break out a little bit lower on this larger outside downtrend line through here, right? And then take off from there. I think that would be a lot more bullish and a lot better setup than what we sort of got through here, because to catch the bottom here, you really just had to catch a falling knife. And I'd like to see a bit of a gut check. Everybody that had bought through here get wrecked, wiped out, stopped out one more time, and then the market sort of takes off and leaves everyone behind that thought they'd already caught the bottom. So yeah, altcoins, obviously Dogecoin was one of the ones we talked about in Discord for a little bit. That broke out, had a really nice pump, but, has pretty much fully retraced. So, at the moment, especially if you get any sort of move on altcoins, it's one you got to flip fast. But that was a pretty nice setup through here. Thanks, Chris Preston, for that one, who was talking about that. I'm pretty sure it was him anyway. We got a nice little rally and it's now retesting. So maybe, it gets another bounce off that, but it's looking pretty bad, right? If that breaks back down into here, it's probably going to roll back over and come back down to the previous lows. All right, so potential short opportunities through there. Solana as well is just a big rising wedge too, right? Failed to get out of this key level, which is the red box, right? Back from the previous highs back here. Right, obviously the red box taken from higher time frame order block. I think it's a weekly, I'm pretty sure, right? So pretty nice rejection through here with the double top, and then it's just rolled over. Now we're at the bottom of this. So that's obviously quite bearish. usually get a retest and then roll over back to the low. So that's what I'm looking for across the board on most altcoins. So hopefully that makes sense, guys. One chart I also have been looking at, and this is basically a copy of Roman's indicators here. So he was pointing out the 4-hour P block might hold as support. That's also the order block through here, which is the red blocks from the daily time frame. That could hold as well. And then we bounce off there. We also have the monthly pivot through here as well at 22.200. So that is definitely a really strong area that could coincide with, 4-hour oversold on the RSI or a 4-hour bullish divergence or something like that, along with the stock market rallying again and pushing higher, right? But the thing I was saying to him before is, okay, look, we've had the rising wedge broken out to the downside. Maybe the market just wants to come back and retest this daily P block. And so how the market plays out of this daily P block will tell us what's going to come next, right? If we break underneath it and we start to reject again off it, we're looking for much lower levels. And then that's when we can talk about 14K and stuff like that. If we bounce off here, right, there's a fair bit of support in there, right? We understand how we're going to want to play off that, right? Longing here. If we do action like that, right, we want to get long in here. We do action like this, right? We want to short here and probably look to take profit here or down here. That'll be pretty interesting levels for sure. And then, if we start getting, a big wick into this and then closing above, some sort of candle like this, that would be pretty nice to get a candle entry, a pin bar entry to look for more upside off this daily P block. Right, so hopefully that covers most options and the ways that the market could move and what we need to be watching for, across the stock market, economy, the bond market as well, through the oil and other commodities markets, and then the other different setups that we can take on Bitcoin and some of the altcoins as well. Thanks a lot for tuning in, guys. If you like our content and our videos, please give us a like and subscribe, or chuck a comment in the comments box if you want to ask a question. That helps us a lot to get the YouTube algorithm out there. So thanks a lot if you throw us a like, and thanks for tuning in. We'll see you all in the next episode.